Hi everybody, welcome to creditcardguru.com. Today we're going to talk about credit, what it is, and why you might want it. So what is credit? Credit in a way is a bank or lender saying to you that we trust you. Why? In order for you to be able to receive credit, you need to prove your credit worthiness. If you are credit worthy, then a credit card bank or a lender will issue you some credit. Credit permits you to buy something today, even though you don't have the money today. When you accept the credit, you promise to pay back the creditor or the bank or the lender at a future date. The more credit you use, the more debt you will, however, incur. Credit can help you purchase a good or service now versus later. So if you have cash, you don't really need to have credit. But if you're looking to purchase something more expensive or you don't have enough cash, you might want to take advantage of credit. And here's an example. You're 20 years old, you have a full-time job, you want to purchase a big screen TV for your Super Bowl party coming up next week. You don't have the $500 in cash to purchase the TV. You go to an electronics store, you see a special promo. Sign up for a credit card offer and get 10% off. 10% off is pretty good. If you're spending $500 on a TV, that's $50 off. So that might be a pretty good incentive to apply for the credit card. Hopefully you'll get approved. So you apply for the credit card, boom, you get a credit line of $2,500. Now that doesn't always happen. They may offer you $500, or if you don't have any credit, you may not get a card at all. Presuming you have some type of credit and you're able to get this credit card, now you have a credit line of $2,500 to use. What that means is, and that's an unsecured credit line. So what that means is you could apply, for that card, you get $2,500. You can purchase goods and services, or goods in this case, in that store up to $2,500. So you go to the store, you have the card, you get approved, you buy the TV, now you have your TV, and you haven't spent any money yet. You will, however, get a bill in the month, 30 days later or whatever it is, and you'll have to start making payments on that TV. We strongly suggest you just pay it off as fast as you can. That will help you establish credit. That's an example of an unsecured credit card. What types of credit are there available? It's usually either secured or unsecured. So a secured card, or a secured credit for that matter, requires some type of security deposit. A secured credit card requires collateral. Secured credit in general, again, will require some form of collateral. It could be in a form of cash deposited into the bank for a secured card. And then that deposit amount would most likely be your credit limit. The reason why they want some type of security deposit is it will eliminate some of the risk to the bank. They know that if you deposit $500 into the bank account for a $500 secured card limit, that's the only amount they're going to let you use. So if you go over $500, they're not going to let you go much past that in most cases. If you're trying to buy a car, they're going to ask for a secured loan. They're going to want the title of your car, and then they'll hold that title as collateral. So if you don't make your car payments, they're going to take your car back. If you go to purchase a house, same thing. They're going to take the title of your house. You're going to make your mortgage payments, but if you stop making that mortgage payments, they're going to evict you and try and take the house back. Those are all forms of secured credit. Now there's also unsecured credit, which is typically like a personal loan with no collateral, or a credit card offer with no security deposit required. It's harder to get an unsecured credit card or to have unsecured credit because you already have to have proven history of positive credit history, or prove to the banks that you're willing to pay back debt. So it's harder to get an unsecured credit. So once you've established credit in some form or another, you might want to start looking at getting an unsecured loan or a credit card offer. So in summary, if you'd like to be able to get a credit card, personal loan, auto loan, or a mortgage in the future, then you should start working on building a positive credit history sooner than later. This will not only give the ability to purchase things you want on credit, but it will save you money in the long run, because the better your credit score is, the lower interest rate you're going to be paying on your credit card offer or your loan. And thank you today for listening to our article on creditcardguru.com. about what is credit. We'll have many more articles available to you in the near future, and have a good day.